Dear students, in this video, I'm going to teach you that the leverages and how to interpret the results. So let us take a simple problem on leverages calculations and preparation of income statement. The installed capacity of a factory is 600 units. Then the actual capacity used is 400 units. Dear students, the maximum capacity in the factory is 600 units, but out of 600 units, they are used to produce only 400 units. So there are two units here. One is 600 units, that is installed capacity, and the actual capacity is 400 units. And you should consider only 400 units. That is actual capacity. Actual capacity units you must be considered for calculation of sales. Then the selling price per unit is rupees 10, and the variable cost is rupees 6, that is per unit, and interest is rupees 450, and the income tax rate is 30%. And they calculate operating and financial leverage from the following three situations. What is the three situations here? One is the first situation, whereas when fixed costs are rupees 400. Next, B, when fixed costs are rupees 1000, and C, when the fixed costs are rupees 1200. So you have to prepare an income statement first under three different situations. Then you have to calculate leverages. So let us prepare an income statement, whereas the first column will be particulars, and whereas fixed cost is 400 in a situation A, and whereas fixed cost in a situation B, it is 1000. The fixed cost is 2200 in situation C. Then you calculate sales now. So sales, that is selling price is rupees 10 and the actual capacity is 400. So 400 units into 10, so we'll get 4000 all cases. So 4000, 4000, 4000. 4000, 4000, 4000. Then you deduct a variable cost. The variable cost is rupees 6 per unit, and the number of units will be 400 units. The 400 units into rupees 6, 2400, 2400, 2400 in all the three situations. Then you deduct a variable cost from the sales, that is 2400, that is 4000 minus 2400, 4000 minus 2400 in the second situation. In the third situation also 4000 minus 2400. Then you will get a contribution of rupees 1600, 1600, 1600. Then, so what you have to deduct now? Fixed cost. A fixed cost in the first situation, how much? 400. In the second situation, 1000. And third situation, 1200 rupees. The fixed cost 400, 1000, 1200. So 1600 minus 400 will get 1200, and 1600 minus 1000, that is 600, and 1600 minus 1200, that is 400, and we call it as EBIT, that is operating profit. Then EBIT minus interest. Any interest is given here? Yes, interest is rupees 450 for all cases. So 450, 450, 450. Therefore 1200 minus 450 will get a 750, and 600 minus 450 will get 150, and 400 minus 450 will get minus 50. Next, you deduct income tax. If they are giving, yes, they are given income tax rate is 30% now. You deduct income tax on taxable, and just calculate income tax on EBT. That is 30% EBT, that is 750 into 30%, 225, 30% 150, 45. And the last situation, you should not calculate since we don't have a profit here. We are having a loss, that is minus 50. So therefore, I did not calculate it here. So that 750 minus 225 will get 525. 150 minus 45 is 105. So minus 50 minus 0 will be minus 50. That's how you have to calculate and how you have to prepare income statement. ನಿಮ್ಗೆ ಗೊತ್ತಾಯ್ತು income statement ಹೇಗೆ ಪ್ರಿಪೇರ್ ಮಾಡೋದು ಅಂತ. ಏನೂ ಇಲ್ಲ, ಇಲ್ಲಿ ಮೂರು ಸಿಚುಯೇಷನ್ ಕೊಟ್ಟಿದೆ. ಇಟ್ ಮೀನ್ಸ್ ಮೂರು ಫಿಕ್ಸ್ಡ್ ಕಾಸ್ಟ್ ಕೊಟ್ಟಿದ್ದಾರೆ. ಸೊ ಫಸ್ಟ್ ಫಿಕ್ಸ್ಡ್ ಕಾಸ್ಟ್ ಎಷ್ಟಿದೆ? 400. ಸೆಕೆಂಡ್ ಫಿಕ್ಸ್ಡ್ ಕಾಸ್ಟ್ ಇಸ್ 1000 ಅಂಡ್ ಥರ್ಡ್ ವಿಲ್ ಬಿ 1200. ನಾನು ನಿಮಗೆ ಹೇಳಿದ್ದೀನಿ ವೇರಿಯಬಲ್ ಕಾಸ್ಟ್ ಅಂಡ್ ಫಿಕ್ಸ್ಡ್ ಕಾಸ್ಟ್. ದ ಫಿಕ್ಸ್ಡ್ ಕಾಸ್ಟ್ ಅವರೇ ತ್ರೀ ಸಿಚುಯೇಷನ್ಸ್ ಅದಕ್ಕೆ 400, 1000, 1200 ತಗೊಂಡಿದ್ದೀನಿ. ಬಟ್ ಇನ್ ಕೇಸ್ ವೇರಿಯಬಲ್ ಕಾಸ್ಟ್ ಇಟ್ ವೇರಿ ವಿತ್ ಸೇಲ್ಸ್. Now once you prepared income statement, you have to calculate leverages. Now leverages na calculate ಮಾಡಬೇಕಾಗುತ್ತೆ. they ask us to calculate two leverages here. One is the operating leverage and financial leverage. Okay, what is the formula for calculating operating leverage? Yes, contribution divided by EBIT. Contribution divided by EBIT. In all cases ಮೂರು ಸಿಚುಯೇಷನ್ ಅಲ್ಲಿ ಫಾರ್ಮುಲಾ ಬರೀರಿ ಅಥವಾ ಒಂದು ಇಲ್ಲಿ ಫಾರ್ಮುಲಾ ಬರೆದು ವ್ಯಾಲ್ಯೂಸ್ ಅಸೈನ್ ಮಾಡಬಹುದು. ಈಗ ಚೆಕ್ ಮಾಡಿ ಎಷ್ಟಿದೆ ನಮಗೆ ಇಲ್ಲಿ ಕಾಂಟ್ರಿಬ್ಯೂಷನ್. 1600 divided by 1200. 1600 divided by 1200 you will get 1.33 times. So 1600 divided by 600, 2.66 times, and 1600 divided by 400 you will get 4 times. Okay, the next leverage ಯಾವುದು? Financial leverage. What is the formula? Financial leverage equals EBIT divided by EBT. So whereas EBIT is how much here? In the first situation 1200, whereas the taxable income is 750. Thus 1200 divided by 750 equal to 1.6 times. In the second situation 600 divided by 150 will get 4 times. The third situation 400 divided by minus 50 here, so minus 8 times. This is how you have to calculate operating leverage and financial leverage. Let us see the one more problem on preparation of income statement and calculation of leverages. Determine three types of leverages from the following information. The selling price per unit is rupees 250. The variable cost is 30%, and fixed cost is rupees 6,25,000. 10% debt capital is 5 lakh. So 10% debt capital rupees 5 lakh means you need to calculate interest here. It 10% indicates the rate of interest on debentures. So therefore, the 10% on 5 lakh, the interest will be 50,000, and the number of units sold is 25,000. Now let us prepare income statement now. The sales, there is 25,000 units are sold, into selling price is 250, so you'll get 62,50,000, and less variable cost, that is 30% on sales, that is 62,50,000, you'll get 18,75,000. Now 62,50,000 minus 18,75,000, then you will get a contribution of rupees 43,75,000. 43,75,000. Then you deduct a fixed cost. You need to deduct fixed cost. What is the value of fixed cost here? 6,25,000. So 43,75,000 minus 6,25,000, then you will get 37,50,000, and we will be called as EBIT, that is operating profit. And you deduct interest. 37,50,000 minus 50,000, the taxable income will be 37 lakh. So once you prepare the income statement, then you need to calculate leverages now. There are three types of leverages. The first one, you calculate operating leverage. What is the formula? That is contribution divided by EBIT. So what is the value of contribution here? 43,75,000. And what is the value of EBIT here? 37,50,000. So 43,75,000 divided by 37,50,000. So you will get 1.16 times. So next, the financial leverage. Whereas EBIT divided by EBT, so 37,50,000 divided by 37 lakh. So EBT divided by EBT, so he will get a 1.01 times. So what is the 1.16 times means? If 1% changes in sales leads to 1.16% changes in EBIT, and here the 1% changes in EBIT leads to 1.01% changes in EPS, that is Yes, EPS. So next, combined leverage, operating leverage into financial leverage. So operating leverage 1.16 times, already calculated. And next will be financial leverage 1.01 times. And there you'll get 1.17 times. This is how you have to calculate leverages. We will see one more problem. So calculate operating leverage and financial leverage from the following. Sales is rupees 1 lakh at rupees 5 per unit, and the variable cost is rupees 1 per unit, and fixed cost is 1 lakh, and interest expenditure is 20,000. Dear students, so here they have given sales value as well as selling price per unit. It means you need to calculate number of units sold. So number of units sold na calculate ಮಾಡಬೇಕಾಗುತ್ತೆ. ಹೇಗೆ ಅಂದ್ರೆ the sales value divided by selling price. So 1 lakh divided by 5, you will get 20,000 units. 20,000 units sold. It indicates ಅದೊಂದು hint ಕೊಡ್ತಾ ಇದ್ದಾರೆ. Then, so let us prepare income statement now. A very simple problem. The sales, that is 1 lakh, and less a variable cost. So ಹೇಗೆ the sales value 1 lakh rupees is divided by 5 rupees per unit into 1 variable cost per unit. ನಾವು ಯಾಕೆ ಈ ರೀತಿ ಮಾಡ್ತಾ ಇದ್ದೀರಿ ಇಲ್ಲಿ? Because they are not given a number of units. Therefore, we have calculated here. So 1 lakh divided by 5 rupees, you will get 20,000 units. 20,000 units into 1, you will get 20,000. Then 1 lakh minus 20,000, you will get 80,000 as contribution. Then you deduct the fixed cost is rupees 1 lakh. So 80,000 minus 1 lakh fixed cost, you will get minus 20,000. That is EBAT, that is operating loss. And where you have to deduct interest expenditure. So interest expenditure is minus 20,000, that is 20,000. So minus 20,000, that is operating loss. Again minus interest 20,000, so we'll get minus 40,000. So this is how you have to prepare income statement. Once you prepare income statement, you have to calculate leverages. They asked us to calculate two leverages here. One is operating leverage and financial leverage. Let us go to first one, operating leverage. What is the formula? Contribution divided by EBAT. Contribution is how much? 80,000. EBAT is how much? Minus 20,000. So 80,000 divided by minus 20,000. So minus 4 times. Next, a financial leverage, EBAT divided by EBT. Here you get operating loss. Therefore, we need not to calculate leverages anywhere. So minus 20,000 divided by minus 40,000. So minus will get cancelled. Therefore, 20,000 divided by 40,000 will get 0.5 times. I hope ಎಲ್ಲ ವಿದ್ಯಾರ್ಥಿಗಳಿಗೂ ಅರ್ಥ ಆಯ್ತು ಅಂತ ನಾನು ಎಕ್ಸ್ಪೆಕ್ಟ್ ಮಾಡ್ತೇನೆ. And I thank you, my dear students, for watching the video.